The US dollar is about to change forever, and many are concerned what it means for them. In a recent publication, the World Economic Forum highlights that over 98% of the global economy's central banks are researching, piloting, or deploying central bank digital currencies, or CBDCs. As of 2024, several countries have officially launched their central bank digital currencies. The Bahamas, Nigeria, and Jamaica are among the few that have fully launched their digital currencies. Many other countries are in various stages of piloting or developing their own CBDCs. We can't talk about digital currencies without discussing digital IDs. This is going to be a hot button topic for sure, as many privacy concerns have been mounting over the recent years. Countries like the Ukraine with their Dia app have already begun testing digital IDs to help with filing taxes, renewing passports, and even reporting the location of potential Russian soldiers. Digital IDs could have some positive impacts though, but it could also be a Pandora's box to social credit scores, which terrify me. In 2023, the United States Federal Reserve launched a new instant payment infrastructure called FedNow service. Is FedNow a precursor to the US version of the central bank digital currency? In this video, I'm going to break down central bank digital currencies, the FedNow service, and how a CBDC could integrate with it and digital IDs. I'm also going to explain the difference between CBDCs and cryptocurrency, so let's get started. Central bank digital currencies are a new and evolving aspect of the financial world, with many countries already exploring and implementing their versions of it. Here are 5 controversial features of CBDCs. Complete transaction visibility. CBDCs allow central banks unprecedented visibility into all transactions in real time. This capability means that every transaction made using a CBDC can potentially be tracked, monitored, and analyzed by the government or central bank, which raises many concerns about privacy and surveillance. Direct control over money supply. With CBDCs, the central banks could have the ability to implement monetary policy directly. For example, they could implement a program where money could expire after a certain date, which would encourage spending during economic downturns. They could also implement a negative interest rate directly on the digital currency to stimulate economic activity. China has already implemented an expiration date on a digital yuan. This type of control over the money velocity could have tremendous benefits for the government, but does it scare anyone else except for me? It makes me think of those gift cards that you never use, and then poof, the money's gone. You'll never be able to use it again. Exclusion and control. CBDCs could potentially exclude or limit participation for certain individuals or groups. For example, access to financial services could be denied if certain conditions are not met, such as a minimum balance or a specific user identification, or even social credit scores as seen in some proposals. Social credit scores are really concerning to me and should be to anyone really if you want a free nation and you don't want to go down the same path that China is going down. China's social credit system is a combination of government and business surveillance that gives citizens a score that can restrict the ability of individuals to take certain actions, such as purchasing plane tickets or acquiring property or taking loans, because of the behaviors that they may have had. Given the position of several major American companies, a similar system may be coming sooner than you think. Elimination of cash anonymity. The introduction of CBDCs could lead to the phasing out of cash, thereby eliminating the anonymous behavior currently associated with cash transactions. This shift could dramatically change how personal privacy is viewed in the context of financial transactions. Potential for international power shifts. If major economies successfully implement and internationalize their CBDC, it could shift a dramatic balance of economic power. For instance, if countries' CBDCs become widely accepted internationally, it could undermine the dominance of a traditional reserve currencies like the US dollar, reshaping the entire global trade and financial dynamics. These aspects highlight the transformative potential of CBDCs, not just economically and socially and politically as well. As countries experiment and roll out these digital currencies, the implications of privacy, security, and economic power could be profound. Speaking of implication for privacy, let's talk about digital IDs in conjunction with CBDCs. The concept of tying a central bank digital currency to a digital ID for each individual involves integrating digital identity systems with the management and transaction of digital currency. This approach aims to enhance security, streamline transactions, and improve regulatory compliance. Here's how it might work and the potential benefits and challenges associated with such an integration. Integration of digital ID and CBDC. Digital identity verification. To use a CBDC, individuals would first need to verify their identity using a digital identification system. The system could be managed by the government entity or a trusted third party who would store the key identity information securely, hopefully. Account management. Once verified, the digital ID would be linked to a digital wallet or an account that holds that CBDC. This linkage ensures that only verified individuals can access and transact with that CBDC, which is reducing the risk of fraud and other illicit activities. Transaction authorization. For every transaction made with the CBDC, the individual's digital ID could be used to authenticate and authorize that transaction. This could involve biometric data like fingerprints or facial recognition, two-factor authentication, or other secure methods tied to that digital ID. Record keeping and transparency. Transactions can be recorded in a secure, immutable ledger. Immutable just means it can't be changed, and possibly utilizing blockchain technology, with entries that reference the digital IDs of the transaction parties. This provides a clear audit trail and could be useful for regulatory reporting and compliance. So what are the benefits of tying a CBDC to a digital ID? Enhanced security. By requiring digital ID verification for transactions, the system minimizes the risk of fraudulent transactions and enhances the overall security of the digital currency itself. Improved regulatory compliance. Financial regulators can more easily monitor transactions to ensure compliance with laws concerning anti-money laundering, counterterrorism, and other financial regulations. Increased efficiency. Digital IDs can streamline the process of identity verification, reducing the need for repetitive documentation and speeding up the transactions. I hope this comes out for medical offices so I don't have to keep filling out the same thing over and over again for my doctor's appointment. Financial inclusion. A CBDC can be tied to a digital ID, could help bring the financial services to underserved populations who lack traditional banking facilities but can access digital technology. So what are some of the challenges and concerns with digital IDs? Privacy. There are significant concerns about privacy and data protection. Storing and managing personal identity information and financial transactions in a digital format definitely raises concerns about who can access this data and how it's protected. Technological infrastructure. Establishing a robust technological infrastructure that is capable of securely managing these digital IDs and CBDC transactions is a major undertaking. It requires significant investment and coordination across various stakeholders, plus some people who actually know what they're doing and can actually manage the project. Public trust. Gaining the public trust in a system that involves close monitoring of your financial transactions by a government entity can be challenging, to say the least. Transparency about data use and safeguards against misuse will obviously be critical. Inclusion issues. While a digital ID system can enhance financial inclusion, it could also exclude those without access to the necessary technology or those who are unable or unwilling to participate in a digital ID system. In summary, integrating a CBDC with a digital ID involves using technology to securely link individual identities with their financial transactions. While this can enhance security, efficiency, and regulatory compliance, it also raises important challenges, particularly around privacy, technological demands, and public acceptance. Careful design and robust safeguards are essential to address any of these challenges and ensure that the benefits of using such a system are realized without compromising individual rights. Earlier, I mentioned the United States launched the FedNow service to speed up the money transfer process. I'd like to take a few minutes to explain what FedNow is, and then also show how it could be the precursor to the United States central bank digital currency. FedNow. FedNow is a service developed by the Federal Reserve to enable financial institutions of all sizes in the United States to provide real-time payment and settlement services to those customers. Launched in 2023, the service aims to modernize the U.S. payment system and facilitate instant payment transactions 24 hours a day, 7 days a week, and 365 days a year. Key features of the FedNow service. Instant payments. FedNow will enable instant transfer of funds between accounts. This means that money sent from one party to another will be available almost immediately, regardless of the time of day. 24/7, 365 availability. Unlike traditional banking systems, which might be limited by business hours for certain transactions, FedNow operates continuously, including weekends and holidays. Interoperability. The service is designed to be accessible to all banks and credit unions in the United States, allowing seamless transactions and interactions between the different financial institutions. Security and fraud prevention. Enhanced security measures will be integral to the FedNow service, with tools that can detect and prevent fraud in real-time transactions. Integration with existing banking systems. FedNow will not replace existing payment systems like ACH or wire transfers, but will be an additional option available to consumers and businesses. Benefits of FedNow. Convenience. Customers can send and receive money instantly, improving the efficiency of transactions such as bill payments, peer-to-peer transfers, and emergency distributions. Economic inclusion. By providing immediate access to funds, FedNow can help lower-income individuals manage their finances more effectively, avoiding the need for high-cost, short-term lending. Did you know that 12 million American adults use payday loans annually? On average, a borrower takes out 8 loans of $375 each per year and spends $520 on interest. Support for businesses. Businesses will benefit from immediate access to payments received, potentially improving that cash flow management. In summary, FedNow presents a significant step forward in the evolution of the U.S. payment system, long overdue, promising to deliver substantial benefits in terms of speed, convenience, and financial inclusiveness. However, the success will depend on the technical execution, the regulatory environment, and the market reception. So how does FedNow fit into the conversation of the digital dollar? FedNow and a potential central bank digital currency in the United States would likely serve complementary roles in the financial system, but they're fundamentally different tools with distinct functionalities. FedNow is a payment service that enables instant round-the-clock money transfers between participants using existing forms of money like bank deposits. It is designed to modernize the U.S. payment infrastructure by making transactions faster and more accessible for all banks and their customers. CBDC, or central bank digital currency, refers to a digital form of fiat currency issued and regulated by the nation's central bank. A U.S. CBDC would represent a new form of digital money, backed directly by the Federal Reserve and not by private banks' money. This digital currency would likely coexist with traditional forms of money, cash, and bank deposits. Potential interactions between FedNow and CBDC. Infrastructure and accessibility. FedNow could potentially serve as part of the infrastructure to facilitate widespread use and accessibility of a U.S. CBDC, providing a ready network of financial institutions already capable of handling real-time transactions. FedNow might ease that integration and distribution of a CBDC. Settlement speed and efficiency. Both FedNow and a CBDC aim to improve the speed and efficiency of payments. FedNow does this within the existing monetary system, while a CBDC could streamline processes further by directly transacting in central bank issued digital money, potentially reducing the need for intermediaries and lowering those costs. Enhanced services. Integration with FedNow could allow a CBDC to leverage its real-time processing capabilities. This would enable innovative financial products and services that utilize the features of both systems, real-time capabilities of FedNow and the secure state-backed nature of a CBDC. Financial inclusion. Both systems could work together to enhance financial inclusion. While FedNow can make banking services more accessible and efficient, a CBDC could provide an alternative form of money that is universally acceptable, potentially even to those without a traditional bank account. Policy and regulation implementation. A CBDC could be used as a tool for more direct implementation of monetary and fiscal policy. Through FedNow's existing network, the central bank could potentially manage aspects of a CBDC distribution and monitoring more effectively. Challenges and considerations. Adoption and trust. This one's a big one, obviously. Public and institutional trust in a new CBDC, along with its adoption, would be crucial. FedNow's existing framework and familiarity amongst financial institutions might help in building this trust, but I think there's a long way to go in this. While FedNow and a CBDC serve two different purposes, they could potentially interact in a way that leverages the strengths of both and enhance that efficiency, accessibility, and innovation that the US financial system desperately needs. Is a CBDC the same as cryptocurrency? No. A central bank digital currency, or a CBDC, is not the same thing as Bitcoin or other cryptocurrencies, although they share some similar technological foundations. There are several key differences between CBDCs and cryptocurrencies. For one, issuance and control. A CBDC is issued and regulated by a country's central bank, which is a government authority. This means that a CBDC is a legal tender backed by that government, much like a traditional fiat currency like the US dollar or the euro. Cryptocurrencies are generally created by private entities or groups and are not issued by or regulated by a government or central authority. They operate in a decentralized manner, typically using blockchain technology. A CBDC is intended to complement or replace a traditional fiat currency and modernize the financial system. CBDCs are designed to make payment systems more efficient, reduce transaction costs, and enhance financial inclusion. Cryptocurrencies initially were created as an alternative to traditional currencies and to enable peer-to-peer financial transactions without the need for a central authority. Some cryptocurrencies like Bitcoin have become popular as speculative investment assets and are sometimes considered digital gold. Definitely watch my video about how Bitcoin will eat gold. Technological backbone. A CBDC may use various technologies, and not all CBDC projects use blockchain or a distributed ledger technology. The choice of technology depends on the goals of the central bank, including the considerations like scalability, security, and control. Cryptocurrencies almost always use blockchain or another form of a distributed ledger technology. This technology supports their decentralized nature, allowing them to operate independently of a central authority and providing transparency and security through cryptographic techniques. Stability and value. CBDCs are designed to have a stable value directly pegged to the country's existing fiat currency. So one CBDC would be equal to $1 US, for example. The stability is essential for a CBDC to fulfill its roles as an everyday transactions and a monetary policy. Cryptocurrencies are known for their price volatility, with values that can fluctuate widely based on market dynamics, investor sentiment, and regulatory news. This volatility can make cryptocurrencies less suitable for use in a standard economic transactions like buying goods or services. The regulatory environment. As an extension of a fiat currency system, a CBDC would be fully regulated by a central bank and other relevant government agencies. It would also be designed to comply with financial regulations, including those relating to money laundering and terrorism financing. Cryptocurrencies typically operate in a regulatory gray area, though many countries are increasingly developing specific regulations that govern their use, including the rules related to security and exchanges and taxation. CBDCs and cryptocurrencies may share some technological aspects. They're fundamentally different in terms of control, their purpose, the stability, and regulatory compliance. CBDCs are state-backed digital currencies aimed at improving the official monetary system, whereas cryptocurrencies are decentralized digital assets that operate outside of a traditional financial system. So what are my thoughts on all of this? Well, I'm really hesitant to trust the government like many Americans these days. But ultimately, it's going to happen. Making transactions faster and easier for everyone, that sounds great to me, and I can get along and get on board with that. But the privacy concerns is what really gets to me. And the implementation of social credit scores, that's terrifying to me. One technology that was designed to be secure and not require any trust is cryptocurrency. Watch this video next to learn how Bitcoin will overtake gold. Some might even say it will eat gold.